Hello, everybody. Today is March 18th. I'm sorry, May 18th. May 18th, not March 18th. May 18th. It's 4:15 p.m. The S&P, Dow, and Nasdaq just had another down between 4 and 5% day. We're kind of going to breach into the crypto world today, so I hope you are interested. We have Spencer and Charlie with us. Before we get going, it's just a quick prelim. This is the Misfit Happy Hour. Charlie actually came up with the idea, and Lucci and company, to create a program where we could get together as we would have after the day on the exchange floor closed, and between us share our freshest thoughts from the day or the past week, and how we wanted to talk about it and approach it in an environment where we would be having a beer at Clark's or another watering hole downstairs across from the exchange. And given the current situation in the crypto world, it seems appropriate that we have Spencer here for a beer and help us get through it. Before we get going, there's another masterclass coming, and it's a great thing everybody should join if you can. And let's see, I have a little promo if I can find it here. Oh, it's Charlie's. Anyway, I believe it's coming in
June 6th. June 6th is the next live session. Yeah. And
so I'm one of the teachers, as is Ranch and Jay, Wall Street Jesus, and Sang Lucci himself. Maybe Spencer will show up as well. Charlie, of course, is an incredible sort of emotional coach and how to process the trading decisions that we go through. And they have a long track record of teaching a lot of people. And given the current situation, it's probably better to buy the knowledge than it is to pay for it through experience. And so between all of us, I teach a lot of structure. Charlie teaches a lot of great psychology with me at the end. Ranch has a particularly good thing. Jay is a brilliant long side options trader, and Luch, of course, is a cowboy and very good at reading tape. And so those are 3 or 4 great sort of foundations to build your house and create a knowledge that you can lean against. And without further ado, Charlie, is there anything else that needs to be said, or did I get that okay?
If you want to learn more, just go to sanglucci.com/MC for the
master course
product page. Yeah.
Right. And certainly reach out to any of us about any of that. And we don't teach it often. And so we're teaching what's working now generally, because we're traders first. And so the idea is to leave you with a better understanding of how to approach markets that seem to have no boundaries. And so anyway, without further ado, this is Spencer. And Spencer, let's talk about, what did the people miss? What were their assumptions? Were they assuming that crypto was good forever? Wasn't it? Crypto was the answer to, it was a digital gold.
Right. Yeah. So, I mean, it depends on what you want to talk about, right? So if we're talking about the blow up, there's a lot of misconceptions there. But in terms of digital gold, it looks more like a risk on asset, right? So that's exactly how it's trading. I think there's almost an 80% correlation to the NASDAQ. And if you're 80% correlated to the NASDAQ this year, you're not doing very well.
Mm-hmm. For sure. But I mean, there are many people who lost more than 30% in this last 10 days.
Yeah, definitely.
And so what were the assumptions of the people who were invested in that piece of the crypto market that they missed?
Right. So this was the biggest blow up I've ever seen in my life, right? So I think at the highs, Luna, the token Luna was around 40 billion, and then UST, which is also within the Terra ecosystem, was around 18 billion. And they're both trading near zero now, right? I think UST is on 10 cents on the dollar.
It's like 20, right? 10 or 20. Yeah.
Yeah. So the big misconception was, and I think they did an amazing job of kind of defending this for the years, was that it was a sound system. Now, if you kind of poked around in crypto and started looking at the documentation, there was an understanding that a full-on bank run on this anchor protocol, which was in the Terra ecosystem, would cause mass debt loops, mass negative feedbacks within the whole Terra system.
Right.
And that's exactly what happened.
A collateral chain collapse.
Exactly.
Right. And so that happened in 2008 is with the subprime thing, where all the, the Lehman paper, which people were using at Bear Stearns, and they were using, everybody was putting up that paper as collateral. And when that collateral chain shortened, like, hey, I know you're good for it, but I don't know who's borrowing or leaning on your Lehman paper or your Bear Stearns paper, which you're using as collateral. So I need you to pay more margin, right? And everyone was levered. There was not enough money in the system to support the margin calls.
Yep.
So people, wait, time out. So people assumed that the ecosystem had more money than it did?
Wasn't so. I spent day in and day out. There was often some nights I couldn't even sleep reading these white papers, right? Because I was looking at the ecosystem. I was looking at a 20% return over on Anchor Protocol, and I said, nobody's making 20% right now. The S&P's down 13%, and you can offer 20%. Interest rates over here are rising like things we've never seen. Like, where's this free money coming from, right? And I couldn't solve it. And so if you did some digging, the math behind their net deficit on daily deposits was around $4 million a day. So I came to the conclusion that, you know what, if this is a scam, it's a good one. And oftentimes in crypto, it's not if it's a scam, it's how good of a scam it is, right? And that's usually like, that's oftentimes in all markets, right? And so I came to the conclusion that they were going to keep the game alive, right? And I think a lot of people trusted that they would keep the game alive. And there's one of the reasons that I thought they'd keep the game alive is they were actively starting to back their UST, which is their algo stablecoin with reserves, right? And so they had a $10 billion plan to acquire $10 billion worth of crypto assets. And when they do that, that means that the UST essentially is backed by 50% of collateral, which means that the mechanism only has to stay alive for 50% of it, right? They can shoot shots and shoot bazookas and keep the game going. So I was a little more interested in that, but then once it started to unwind, it was a matter of days. It was just a matter of days until everything just collapsed.
So Spence, for somebody who's been sitting in the middle of this and watching this as intently as you have, is your net takeaway that it was a scam, that it was a fraud, or it was a miscalculation in terms of their ability to keep the algorithmic stablecoin pegged to the dollar? Like, is that they just miscalculated?
I've read a lot of threads, right? And trying to understand kind of what's going on. There's a circulating rumor that this was an attack, right? And I was.
So how would that work? Sorry to interrupt, but how would that work, the attack?
Yeah. So unfortunately, and this is where my confession is, I was sitting at the screens at 9 p.m. on a Saturday night watching UST, a stable coin, right? Instead of, I'm 25, I should be doing 25
I'm like
things,
just
right?
curious,
what am I actually doing?
Right.
So I'm watching because there was a DPEG, right? So everything moves fast. All of a sudden you get Telegram chats, boom, boom, boom. And this stuff spreads fast in Telegram. That's where all crypto DMs are. So I get to the screen, I'm looking at it, right? And this is over on Binance. And they're starting to sell some UST, right? And so selling UST, buying USD. And what that really does is that depegs some of it. And there is a depegging. I said, okay, you know what? If you look back into the history of UST, it's depegged down to 83 on the dollar, 92 on the dollar. And if you start to really dive down to this rabbit hole, you'll see that the insurance companies, they're insuring down to 87 cents on the dollar, right? So I said, you know what? Even if we hit 87, the big boys are incentivized to really come in here and rig this system, right? So 98 cents on the dollar, I'm interested, but I'm not terribly interested, right? And so we started to slow and started to sell. And what you'll see is they started selling it on Binance. And because there's no aggregated data feed for crypto, all of these exchanges really matter, right? Because certain people have access to certain exchanges, and where they start hitting bids tells you their geolocation in the world, right?
Is there timeout? Is there an
Oh,
active
shit.
R market because you have so many decentralized exchanges?
Hey man, don't give out all my alpha, all right? But I have a
Come
research
on, they're
paper. I've been working
right,
days on this.
right
Okay.
there.
The
You
answer is
get,
yes.
yeah, they got to be chiseling every which way.
Definitely. There's active R bots in centralized exchanges, active R bots that live on the blockchains, active bots across the board.
Is there any truth to the Citadel BlackRock thing, do you think?
Well, this is where I'm going to go with this.
Okay.
So if you the reserves were bought by LFG. LFG is Luna Foundation Group, right? And
Yep.
this is the nonprofit of Terraform Labs, right? Terraform Labs is basically Terra ecosystem. Their whole purpose of buying, they had 2 billion in assets and reserves to basically stabilize the USD UST peg in a depegging event, right? So I said, all right, let me pull up the tape. Let me see if these guys are actually moving around some of this stuff and seeing what they do, right? 98 cents on the dollar, boom, 4,000 BTC go market USDT, right? So they sell BTC, raise USDT, boom, a magic $6 million bid, re-ups, continues to re-up and sit at 98 cents on the dollar in the USDT UST market. Right? And this is Saturday night. I said, well, you know what? This is a little more interesting than any of the shenanigans I could get into, right? And so this is what started my interest. I started shorting everything at that particular point in time in the whole crypto market, because I said, you know what? The off chance is they don't blow up, and I'll just cover, right? The risk to the upside here is like maybe 5%. The risk to the downside is we're going to have collateral damage across the board, and this is just going to blow up. So that was Saturday, right? And boom, they started going market in the USDT market. Bitcoin clearly were being sold. And so it was my assumption and speculation at the time, this is before any rumors were kind of speculating, that LFG was really putting some of that capital to work to save the peg. So I have USD, right? I had USD at that particular point, and I wasn't too worried. I said, you know what? They're doing what they do. Come around Sunday, Monday is when things got really interesting, right? So there's LPs within crypto that are decentralized LPs. Somebody was able to pull all the liquidity from these LPs. So essentially there was no USD in the reserves. And you just saw market sell orders in USD. And this is where interesting things start to come into play. This is boom, you start hitting 98 on the dollar. We start hitting 97 on the dollar.
Who do you think pulled? Who pulled? Who could do that? Who could pull the? Is it the banks?
We could speculate on who this would be, and I've
sat here and
speculated.
Right? Who could it be? Is it the risk guys? Is it someone big upstairs who's just like, say you clear at a big bank and all of a sudden they're like, no, you're out. You can't be there. You can't market make. You can't ARB. This is too terrible. We got the nod, right? The risk guys got the nod.
Chris, I have even something a little more interesting, right? So why would you bid 98 on the dollar, right? Why step in there, right? Why not just bid 87 on the dollar where all these insurance claims kind of go bust?
Right, yeah. Why wouldn't you?
There's something called a CDP, right? A CDP is a collateralized debt position, right? This is basically a pool of over collateralized loans, right? So there's a basket of all of this debt, right? That you can trade your UST into to trade into one-to-one equivalents with your UST, right? So there's AUST, which is a CDP, right? Mm-hmm. So if I deposit into Anchor, which is this high-yielding bank account, right? I'm trading AUST, UST to AUST is 1.23 on the dollar. So I'll get credited 81 on the dollar for my debt position, right? With this debt position, I can take it to another collateralized debt position market and trade it one-to-one. I can then trade that 1-to-1 MIM token back to UST, deposit back into Anchor, and leverage up my yield, right? I can do this 10 times and have a loan to value ratio close to 97%, 93 to 97%. And that means anything under 98, 95
Triggers every
cascades a
the whole.
massive debt loop.
Got it. It's the
Right.
it's the doom machine starts.
So people in the space in crypto knew this, right? They're like, okay. And so that's why the bid stepped in at 98. They said, you know what, 87, we might not be able to control at that point, because we're looking into this massive bad debt wave that's just going to obliterate everybody.
Was there, I mean, Spence, how deep did you have to go to find these like trigger points, these price points? Were these points that were discussed and sort of known in the space? Or was it just like, no?
It was known that you could debt loop these, right? And it's still known that you could debt loop these. And that's kind of why I backed out of really buying this debt, because we're talking about $60 billion worth of paper that who knows where it's going to go, right? There's contagion everywhere at this particular point in time. Now, it was known, it was widely spoken about. I've read it on Twitter threads. Most of this stuff goes down on Twitter. There's Telegram groups, there's Reddit threads everywhere. And if you start looking into the documentation and white paper, it's open source. It's actively known. So that's where the game really started getting interesting, right? And so once we reclaimed 98, we bounced 99, I think, on the dollar. I said, you know what, everything's kind of saved going into Monday. Things were calm. 4 p.m. rings. Somebody goes market UST and totally depegs the whole thing. And then this is where I said, you know what? There's a game here and somebody's pulling strings, right? Because why would you wait until the bell of New York to just slam a bid on something that just repegged?
Right.
So I believe it was an attack. Again, these are things that you're never going to know and you're going to speculate on that you never know. Right. But this particular story is some of the most interesting things I've seen in all markets.
Yeah. Fuck. Imagine, yeah. Right. Imagine, right, that someone is, everybody was like kumbaya. Like this is our answer to the Fed printing and the debts, explosion, and this is your digital gold, et cetera. And this is the new ecosystem. Like all the programmers, I was at a wedding and a programmer friend of mine, it was like right out of the graduate. He's like, I've done this, I've read all the code, right? They're not worried about a Ponzi. They only think that the code is the answer or the brand is the answer, right? It's the Bitcoin is the future, or the code behind Solana. It's, it's fast and it's cheap to build and burn. And so, I mean, it's an interesting wake-up call, like a forced awareness, like, holy cow, like our nirvana, our future. I mean, essentially, if it was Citadel or BlackRock, and that was the story, as you said on Twitter, I mean, they're just playing the game, and everybody, how many there must be stories, right? You must know people who just lost everything.
Yeah. Those started to surface, and those are sad.
Did you see the Fed's Kashkari came out and said, Kashkari came out and said, I think yesterday, that it was better that it happened now than when there was more money involved. And I was like, woo, salt, meat, wound.
I agree, though. I mean, it's a sobering comment, but it's reality, right?
Right. So to everybody who's out there, I would suggest the same thing can happen in stocks. And I think perhaps you saw that, was that 2 days ago, where they spent all day buying them at 38.90, and then the close came and they ran them up 60 handles on the Chinese announcement that tech stocks were going to be backed or resupported by the Chinese government. And so you're like, oh, obviously the people who bought them at 38.90 knew the Chinese. Maybe it was the Chinese, maybe it was some central bank. Somebody knew, right? They were buying them at 38.90 all day. They've run them up all the way up to, to Powell. Well, no, they run them up on the opening, then they puke them. Imagine this, right? The criminals have no conviction, right? The criminals have no conviction on the long side. And that was a major tell for today, I think. And so after the usual Powell print job today, they couldn't find a bid. And so I just think that what's happening in crypto is also very, very relevant to other markets where you expect behavior to be logical and or ethical. And I think that perhaps is a distressing, unfortunate awareness that it's not. But I think if we integrate that thinking into our behavior and we look at the behavior, assuming that we assume it's not a level playing field, and we try and shelve the anger, at least maybe we've got a shot of reading through the tea leaves of what is not a level playing field. Sorry, Spence, I don't mean to cut you off.
No. These are interesting things. This would be a question for you. It's pretty apparent that the free money is basically gone, right? And things are really starting to dry up in terms of liquidity, access to money. And the question is there a direct correlation, do you think, within malicious behavior at these particular points in time and access to those free money?
Well, let's look at it this way, right? The price behavior of a particular asset class is its best marketing tool for more money to be allocated to it. All right,
True.
so, right, so I'll say it again, the price behavior.
Fortune favors the brave. So I've heard. So I've heard.
Or Matt. I mean, I'm sure he was just shilling, but man. So the price behavior of a particular asset class is its best marketing tool for more money to be allocated to it. The price behavior of crypto has not been good. Therefore, you have to expect, as you say, the money to dry up because the price behavior is not supporting more money to be allocated to it. You know, simply you could say, why'd you buy it? The price is going up, right? Or why'd you sell it? The price is going down. But people got so smoked, you know, the girl doesn't call you back.
I mean, that's a really interesting question that you're bringing up, Chris, because my question with crypto is whether or not, like, of course, there are people who are buying and selling based on, you know, as an asset, they would trade any other asset or security. But I also feel like there's so much of crypto that is, people are drawn to it for psychological reasons, for social reasons, signaling, you know, I'm the type of person who buys crypto. I'm the type of person who has NFTs, you know, same thing, same way that people buy shoes, buy like limited edition sneakers. I think there's a lot of people who it's like, this is my tribe. I'm a crypto person. I'm a blockchain person. I'm an NFT person. And so it's interesting to think about how what you're talking about, like the past performance of the asset is related to crypto when you have this like really deep psychological identity piece to it factored in for a lot of people.
Yeah, I mean, think about the idea that this was their digital gold. This was their way out, right? Their wage growth is not going to keep up with the inflated price of assets, right? And people are being forced to work longer later in the workforce because there was no 7% for their IRAs and long bonds. So they weren't making it up the corporate ladder, right? So they were like, well, we're not going to make it up the corporate ladder. We know stocks are overvalued. We can get in on the ground floor in crypto. We're going to at least keep up with inflation. This will be our rate of return. It will be our retirement.
Yeah, that's the thing that's so brutal. I mean, you look at some of the responses from like these Do Kwon threads, and it's brutal, man. There's people who are like, I put my whole life into this. I know people who are going to commit suicide because of this. Like, and not to, you know, go too dark with it, but that's the reality for a lot of people in this is like,
yeah, don't kill yourself.
It's not academic.
It's hard.
I felt guilty shorting it. I'm not gonna lie. Like it's the moment in The Big Short where what is it, Ben, the guy that they make the deal, and they're like, this guy turns to him. It's like, you have no idea what you just bet against. And as I'm shorting it, I'm like, this is so bad because people's life savings are in this, right? And there's just collateral damage everywhere.
Spence, I went through that exact feeling years ago, and Peter Kearns was a big trader investor, and I had lunch with him, and I said exactly the same thing to him, and he said, as soon as you come to terms with the fact that it's not a level playing field, as soon as you come to terms with the fact that there's nothing you can do about it, then you'll trade much better.
Definitely.
And it's so disheartening.
What were you shorting, Chris? What were you shorting?
Oh, I was just complaining, the usual, someone knew something, they knew the unemployment number before the official announcement or something, right? And and I was just so disheartened. I was like, look, I grew up on the exchange, right? It used to be like it was a fair, level playing field. People got you survived and you got paid if you traded correctly. There was professional courtesy. There was regulators. Now there's no regulators. Now it's just a casino. It's a joke, honestly. But Spence. All right, so if you're a new person to crypto now, you want to you're like a seagull at a picnic picking up the bones, the chicken bones after the picnic, right? We've had the
Right.
monster drop, right?
Mhm.
And so there is definitely a school of thought that says, you buy something 90 off if it's going to be around.
Right.
Getting something 90 off is a deal. You just got to wait it out.
Yep.
Are there any of those out there?
So this is the question that I've been thinking about. One is I went through 2018, right? So 2018, I had a nice little portfolio of everything that I thought had potential future for just asymmetrical returns. 80% of it doesn't exist today. And if it does, there was high enough inflationary numbers to where the price didn't appreciate, right? So I think Bitcoin in particular, ETH in particular, some of these other kind of altcoins that are showing promise and disruption of technology is interesting, but I don't think we're done with the amount of pain we're about to feel. Like it still feels like there's a little bit more. But I am starting to look that way. I'm starting to look that way.
Do you have any names for anybody who's listening? If you had a 10-year time horizon and stuff is cheap.
Yeah.
Right.
I started
don't
buying ETH again.
Okay.
I buy Bitcoin and ETH for my sister for all of her birthdays and Christmas. My grandpa used to buy me treasury bonds, and I'm looking at these after maturity and saying this is the worst investment ever. So I'll do the same thing. Either she's going to have a nice asymmetrical return in the future for her family, or there's zeros, right? And
Yeah.
I do think ETH, Bitcoin, some of the tried and true that have survived this long and have gone through those bulls and bear cycles do show some of the promise. The risk curve increases as you go down into the alt space.
Yeah, I mean, I was going to ask the opposite question. Like, for you now, are there other like algorithmic stable coins that you feel like have a target on their back now? Are there other areas where like this thing is just dead man walking?
So there's a couple. I mean, in particular, USDT is huge, right? 80 billion in market cap. If you look at some of the reports, this is always the FUD that never comes to fruition. And there's been about 10 billion in redemptions that have came in over the last couple of days. So they're liquid enough for 10 billion, but the question is, are they liquid enough for 70 billion? So that's where I think some interesting asymmetrical returns could be, right? You short one, you either make or you don't, and your cost to carry is your loss, right? Because if it's one for one, that's your risk.
Hey, is there a discount applied because there is no SIPC? Like this, your trading account, if the clearing firm goes bust on your trading account, the feds bail you out up to, what is it, $1 million? Because digital assets have there is no regulatory framework for recourse if something goes bad, right?
Yeah, it's where you see kind of the good in people more. Like there's a massive collaborative effort, like from some of the biggest guys in the space, right? Vitalik saying that, you know what, I'll pledge money to anybody that lost in UST, or because I think everybody understands that this looks really bad on the crypto space, and for this to be a future, you cannot continue to burn the hand that feeds you, right? Or bite the hand that feeds you.
Yeah, people forget, like after the 2000 meltdown in stocks, in NASDAQ stocks, this NASDAQ roared back to new highs. So there's definitely the potential that people have a short memory and the crypto space can be resurrected, reincarnated, no question.
Yeah, I think it'll come back. I don't have any issues in terms of that. And I'm actually more interested in crypto now that we're down 60% than I was when we were, up 10x. Right, because the real people that are going to come in here and build and some of these projects are going to be your 100x returns.
People love to buy the dip.
Yeah, I mean, it's the same. I mean, someone in the chat, Brooks, just made the same point about, fraud needs to be exposed to allow the technology to advance. Think of pets.com. It's the same thing, man. I mean, Amazon survived, 2001, and look where it's at right now. But a lot of companies that needed to, like the froth needed to be sort of cleaned off the top for like the legitimacy to rise to the top. So, and a lot of, I think you can make, I mean, I'm fucking naive to this, but I think you can make a solid argument right now. And I know people who are very crypto skeptical who are making this argument, who are like, this is probably the best thing that could happen for crypto in the long run. Doesn't mean it's not painful, but
What's interesting is it's almost outperforming stocks. Like today, right? Stocks got crushed and the coins kind of held in there.
It's interesting. Some of these volatility, like we haven't seen this fall in what, over a year.
Yeah.
Bitcoin hit like 150 vol, something crazy, last week, right? And so there's been sell side vol, it looks like, right? That's kind of created some choppiness. So,
I mean, sorry, go ahead, Chris.
No, you go, Charlie. I was going to say, here Charlie and I are basically raised on stocks, and so we're used to having the backdrop of regulatory things, earnings, metrics for valuations. I mean, is your game is just purely momentum?
This is the game. I'm actually more interested in some of the infrastructure inefficiencies, right? So I'm spending a lot of time researching in that, right? So depth of book says one thing, but do we actually know if those are spoofs or real? And then I'm more super interested in the option space. They're basically relaunching and rebuilding options from ground one. Some of these guys out in Chicago are rolling out options contracts on altcoins, right? So you can buy options Solana, options AVAX, options Luna, options BNB, so if I can get in there and really find some edge, there's no accurate way to model these currently. So let's figure out
that's a wild ass experiment to be able
Can
to
you
watch
just tell us
time.
which way the skew goes and that stuff?
It changes, man. So when the market was actually bullish, calls were much more expensive than puts, like a lot more. Now puts are extremely more expensive, right? But it's starting to create more of an efficient market. We're not dying 50% in a day like we used to, because there's some bigger money that's involved. But yeah, it's interesting.
What do you say to somebody who's still caught long the altcoins that have gone to zero?
Well, you can't lose anymore if it's at zero. So, don't sell.
Can't get worse.
You can't get any worse.
Don't average down.
Yeah, definitely. This is after seeing that blow up last week. I'm not in a rush to buy, right? Mm-hmm. I think that if you're able to pick some prices for the longer term and you see a future in the space, there's asymmetrical returns if you're buying crashes. But I'm not in any rush. And in my history, like some of these things don't have to come back, right? So I'm more interested in developers at this particular point in time, VC dollars, and really getting involved with a lot of these communities on the ground level. A lot of this stuff is collaborative. Some of the smartest people I've ever met in my life are working in this space.
But trust is shattered.
Oh, in terms of Terra and Luna?
Yeah,
you can't do anything there. You can't sell if they're at zero.
What about trust in the space? I mean, how do you verify, right? Like, if you have like a network that's leaning on coins and is backed, but they're not displayed. I mean, have they? Right. They don't audit their stuff, do they? They could just be saying that this is what they have.
So a lot of people want to make fun of Matt Damon and the crypto.com commercial, right? Fortune favors the brave. The reality is, if you're in these kind of circles and talking to the people that are into crypto, it was a massive failure, right? It was a great idea, big idea. It failed, right? But nobody is stopping building. Nobody's stopping any of that kind of stuff. If you were involved in looking at crypto, you're still involved in looking at crypto.
But your yoga instructor who's long coins, or your school teacher who's long coins, because they know that the Fed's printing. They know the debt burden's crazy, right? They know that the dollar's at risk, right? These people who don't watch it on Saturday night when they should be out, right? These people who don't, I mean, how do they get a leg up? How do they avoid not making the same assumptions that all the people who don't have the time you do that just got smoked?
Yeah, it's trading like a risk on asset. So until it changes, treat it like that, right? I don't care what anybody tells me. It's a risk on asset at this particular point in time. At the moment it decouples from the S&P 500 or decouples from the NASDAQ is the moment I'll believe a different narrative. But I'm treating it as that right now. Right?
I mean, I think what Jansen just said in the chat is right. Like now they have to educate themselves because it just got smoked. I think that's the message, right? Like you can't, like beware, right?
Yeah.
I mean, speaking of which, and Jensen also made this point earlier, like Spence, right now, everybody's like, okay, what are regulators going to do as a result of this? Like, what do you feel like the impact is on regulation inbound?
I'm more afraid that they're going to come in harder than they would have prior. So there's an opportunity for a misstep, right? You could basically, if the regulators come in and they diminish basically the incentives to build, or they're just dampening growth, then it's going to take some time, and it's going to take some time for any of it to come back, right? But I think regulation is needed, right? If you're able to insure capital, especially at even half of the level that they are right now, there's just going to be massive inflows, in my opinion. Right.
So Spence, Ben Hunt has a piece out today on crypto from Epsilon
Sure.
Theory, and he says that by the regulation, all they're doing is essentially creating a brand, right? The Bitcoin brand, the ETH brand, right? And so it becomes a legit brand.
Yeah.
Right. And so there's an implication
when it's backstopping it.
Right. So
yeah, I think it's very bullish, but I don't think the market will think that initially.
Yeah, and his point was that the billionaire guys get sort of security when the regulators come in there because it becomes branded.
Yeah.
And then the idea becomes, well, okay, well, we can switch it to a more government friendly brand.
Yeah. The space is going to change, right? Right now, there's so much room for innovation because there is a lack of regulation, which does create $60 billion blowups. But we learned something along the way, and the people that were involved on both sides of the trade are going to adapt, or they just won't be involved at any particular point in time.
A quick story just to let people know. I was on the trading floor on the COMEX in the World Trade Center years ago, and a really old guy, he must have been 89, 90 years old, in the summer in a seersucker suit, came down. He was surrounded by all the presidents and all the big guys, and he looked like he was from Greenwich. And I was a kid from Westport, and I couldn't talk to him on the exchange, but I followed him when he left the exchange, and he rode the subway up to Grand Central, and I literally got on the subway and stood next to him, and I asked him in the subway on the Lex line going uptown. It's an express. You have time between City Hall and 14th Street. I asked him, why'd you do it? He says, what do you mean? And I said, why'd you do it? Why did you change the rules on the Hunt brothers when they were cornering silver? And he looked at me and said, because we could.
Yeah. So chilling.
Okay, right. So right, it's not a new phenomenon.
No.
Is my point, is what's happening there, Spence.
Yeah, I mean, definitely.
People are making this point in the chat, like regulators coming in and just not understanding markets. And I remember when we were doing, this is like, 2012, 2013, 2014, we were kind of like involved in this order type abuse and high frequency trading, space, and everything that was going on with direct edge and stuff like that. And, regulators coming in, we'd read these statements about what they were saying that they were going to do. And we were just like, wow, there is reality that like this stuff needs to be regulated, like something needs to be done. But the people, like 99% of the people who are doing it have no fucking idea really what is going on. And that's just shit show in between. Like that's that. And that's what we live in.
You know, as active traders, Spence, we'll do better without the regulation.
Yeah,
For sure.
definitely.
You know,
I
it's
mean,
like game on.
yeah, it's game on. It depends. There's edge right now, but the game will just change and it's going to push people out and it'll bring people in. And
Right.
that's just reality of regulation.
You know, and that's what we want, right? That we want,
Yeah.
we want the opportunity, and God knows we got to adapt, right? Because all of a sudden there's a curveball you didn't see coming. None of us
Yep.
saw coming.
Yep.
Good on you for being there and seeing it. Oh my God, you should have had a video cam going.
I lost track of time, days. All I focused on in the morning was a shower and brushing my teeth, and that was it. I didn't even look at my phone.
Did you sleep?
I slept. Yes.
Okay.
Yep.
Can you imagine, like, you know, that same thing when in 08 when we were melting down, like I'd put orders in hundreds of handles away.
Yeah.
And all of a sudden hear the ding of getting filled at like 3 a.m, being like, no way.
Yeah.
And,
I had I think, what did I have? I had Solana puts and I was buying them 50 cents. They went to $35. Of
right.
course, what was I thinking? I wasn't going to cover at 35, but just insane trading environments last week.
You know, there was this giant rip up on some bullish Fed meeting, I think it was, and the Bitcoin went to 40,000 and change, and like
Yep.
SPOOs had rallied like 5% in
Yep.
2 hours, right? And I was like,
Yeah.
that was I got out of my crypto there. But I mean, I was like, there's a classic underperformance in the, given that you say it's correlated, right? And everybody knows that already.
Yeah.
So in this case, we could say the opposite is happening.
Yeah.
Right?
Yeah. I would say it depends right now. I feel like the blow up in crypto was last week. So things have they're somewhat settling. Everybody's kind of figuring out where the next pieces to pick up are, if there are any, if we got to dump some more.
Right.
But equities are just brutal.
You know, in 2009 in March, the bottom at 666 in the S&P took 5 days, everyone.
Yeah.
5 days. So, you know, it was one of those things where you know, it was just like you had to know that what you owned was, you know, you wanted it because they made it so hard. The momentum was down and they just went sideways, and then they crawled out of those lows.
Yep.
So remember that if we do get a turn up here for whatever reason, and it is a low, you have to assume that the sentiment is so bad, right? Everything, momentum's bad, so that it'll go sideways to burn off the negative momentum. And then everybody who's long, who's thinking that it's still the lows, will get out on the first bounce because they've been trained to counter trend rally. So the real money will be holding through the first bounce, and then that second retracement, which holds the low. Charlie's back.
Yeah. I was looking at what was it, March 2020, the lows in Bitcoin, basically everything spiraled out, collateral again. And it touched 3,000. It was around like 3,000 for a period in time. And then all of a sudden slowly climbed back. And then once it climbed back, that was it.
Right. And so, you know, we say, Spence, we say that change that occurs slowly is more permanent than change that occurs quickly.
Yep.
And Hammer and HFT says vertical ranges that happen quickly trade out, which is essentially the same thing. So if you're looking for it to become a longer term hold, then you want slow positive cash flow your way.
Yep.
And that's one thing I've seen all these years. Charlie, welcome back. What happened?
Clean people turn off my Wi-Fi. My bad. Sorry.
God, you know, glad that you weren't working an order.
Yeah, seriously. Things could have been way worse. So,
and so, Spence, what else can you tell people who are like new to the space and are curious and be like, okay, I hear something happened and now I'm kind of curious about picking up the pieces. Would you tell them where should they open an account?
Open an account. I mean, a lot of people are talking about, did you see the Coinbase earnings and how everybody had a big panic attack over if they go into bankruptcy court, it's not actually your crypto.
Mhm.
Well, if you read the fine print, they've never been FDIC insured, right? So
Right.
it's never been essentially your crypto, but Coinbase in particular, everything's a trust thing. So I've adjusted trust in a lot of things after last week, right? So I bought myself another hardware wallet.
Mhm.
And that's all my cryptos going on a hardware wallet, right? So I'll buy on Coinbase and send to a hardware wallet. And if I want that for the next 10 years, that's where it'll sit, right?
What hardware wallet did you buy, and where can someone buy a
Yep.
hardware wallet?
I would research kind of what you want to do, because a lot of these have integrations into decentralized applications, right? But on a very basic level, some of the biggest ones are Ledger and Trezor, and they both have their own bugs. And there's a bunch of YouTube videos on it, a bunch of blogs on kind of the pitfalls of these in the past. So
And
I
are
would
they
start there.
expensive? Are they expensive to buy?
They're so I think the one I bought, where you can do around 100 apps, so they say, I think you could probably do a little less than that, is like $70.
Cool.
So yeah,
And then, do the markets trade even on Christmas?
24/7. Casino is always open.
Never ends. Never stops.
And do you trade with stops?
It depends on what I'm doing, but yeah, I'll throw in some stops. Yeah, definitely stops. But unfortunately, I have my cell phone, and that cell phone is always giving me quotes. So, and there are options expirations every single day of the year. If you'd like to be in that world as well.
And dabble. And do you think that the central banks manipulate those markets at all?
What are you trying to say here?
Do you think
I
they're
think if anybody has I think people are going to manipulate any market they can manipulate.
right?
It's not going to matter which, but crypto, absolutely.
Right. I mean,
Absolutely.
higher crypto is bad for fiat.
Yeah, it could be a loss in trust in fiat. Essentially, my question is looking at this UST blow up, what's backing the dollar? If
Right.
that was the big fiasco, right?
You know what's backing the dollar, right? What does the Fed have? MBSs. So essentially, residential real estate is what's backing the dollar.
Got it.
And if you listen to Gartman for those years, he would say military, a large military.
I would say military is what I would say.
That's really what we're talking about, right?
Say again, Charlie. I think we lost Charlie's lost in
I think his internet is.
I was saying.
Oh, yeah, we lost our boy.
There you go.
So, I mean, obviously wars are changing, Spence, and so and so there is a historical correlate between the value of your world reserve currency and the amount of that. I mean, there's also a school of thought. I had a friend who was involved as a Belgian diplomat. He was saying in the creation of the euro, he was saying that the trade deficit is actually a positive thing. The larger the trade deficit we have means that you're in the game. In other words, that your currency has value because everyone else is using it. And then, but again, given the Fed's balance sheet, it is predominantly, when it's not in treasury, it's just in mortgage backs. It leaves us with the idea that a resident, it's like the Michael Burry's, Great Big Short. So, so does that mean, right? So does that mean if the dollar starts to get weak, in a fast way and the markets go south, is it that we just start lifting Doge or something that was super cheap? It's like the silver of coins.
I mean, who's got the big money and where are they going to look to store their wealth is always my question. Are they going to buy Doge because they want to park $1 billion there, or they want to buy Bitcoin that has an options market that they can hedge on, or a futures market?
Do we know how many people in the world have, how many accounts are there at Coinbase? Do we know? I don't even know that number.
I don't know the active number. I'm sure you can find it though.
Right, I'm sure
I'm
it's
sure
in
they're
their,
reporting
like
it.
Netflix in their user space. So the idea is that, I mean, first order of the day is that you need the dollar to weaken significantly with
Yeah.
stocks, and then the race is on. And then it's either you buy the silver or you buy the crypto.
Coinbase
Yeah.
says it has 98 million verified users, 13,000 institutions, 230,000 ecosystem partners.
Thank you, Charlie.
Nice.
So, so maybe we buy some dough in the case of nuclear war or something. I don't know, right? Or
Right.
that kind of thing. And so, have you been trading stocks, Spence?
I can't even, I'll watch, and it definitely is correlated, but I don't trade stocks. I more or less look for the money flows, right? So
Right.
if it's flowing out of stocks pretty heavy, I know there's margin calls over there. I know there's a lack of liquidity over here. So if they start spilling their book and it spills over, there's no out usually for them.
And is there a particular setup that you use in crypto that works every time?
Every time, no.
What's your most high percentage setup? I mean, what technical tools are you using, given that given that there's no time's not relevant in your market?
Time is definitely relevant in this market. Time
It
is
is.
definitely, yeah. So oftentimes you'll see the London close, there'll be a change in the tape. 9 p.m. Asian Open, definitely a change in the tape. And then New York has been extremely bearish over the last, I can't even remember how many weeks it's been, but yeah, so time is definitely relevant. I'm often looking at time. I don't always know what day it is, but time is definitely relevant. And then honestly, for the most part, there's a lot of just different kind of opportunities that pop up, right? So a lot of the stuff that I was looking at that worked really well last year were some of these correlations within the arbitrages, right?
Yeah. Yeah.
Um,
How long?
so
When you find a wrinkle in an arb, how long before it gets arbed away?
it depends how bad the other side got hurt, right? So it's often other sides getting hurt, right? So big fund, for instance, last year on ETC, clearly was doing an arbitrage, and there was discorrelation within the futures to the spot market. So the spread opened up to like 80% and they couldn't maintain margin.
Mhm.
And so that creates massive opportunity, and that arb lasted for around 2 or 3 days.
Cool. Did you ever hear the story of long-term capital?
I was thinking about this.
Yes, I
really quick.
have.
Oh
Yeah,
my
I have.
God. I was thinking about exactly this, man.
Yeah, it's fascinating.
Great book. If you haven't read it, When Genius Failed.
Hey, what kind of margin do you get in your accounts?
It depends. So if you're going to go through retail brokers, you're going to get you can get all the way up to 125x, but you can only do that on like notional value of $125 in an account, right? So these risk machines are really good in terms of controlling their risk, but
Yeah.
you could probably get 5 to 6x relatively easy. And then even if you go into institutions, they'll give you credit lines, they'll give you some room
How
or
much
some room.
how much time do you get to meet a margin call?
It depends. It depends probably. So in like OTC, because I'll trade some through OTC.
Yeah,
This
like you
is it's gentleman's agreement.
right.
It's old school, super old school. So depending on the relationship, if you're good for it, if you have a lot of these guys make you go ECP in the United States at least. And so ECP is eligible contract participant, and there's rules underneath that. So yeah, but they'll make you, if they're concerned about it, they'll call it immediately.
We used to
So
get 3 days on the floor to meet a margin
nice.
call.
So like
Yeah.
T+3 essentially.
Yeah.
Nice. Nice. Yeah. Here it's less likely, right? Because vol is so high, I would assume. I call them and I say, you know what, guys, like 3 days from now, we're gonna crash 75%. There could be no more Bitcoin. What are we gonna do?
Right. Go
So
fuck yourself. 3 days.
no, seriously, that's some of the internal conversations. They will literally tell you that. Like, yeah, no.
Right. But again, so to everybody listening, a good relationship with your clearing firm is paramount.
It
And
is.
if you ever get a chance to meet somebody, talk to anybody at risk, buy them lunch, show them that you're not a psychopath, and that will hopefully buy you some rope when you
wonder
need it
what-
the most.
I wonder what percentage of traders now have a relationship with their risk, with their broker. I mean, it's got to be down to like 5, non-institutional, non-professional market.
Right. Right. Yeah.
That
Find.
part of the course. It's what you had to do, and now it's just not even a thing.
Yeah. I mean, even if you're at IB or somebody, just call up and talk to somebody at risk and say, I'd like to have a relationship with somebody here in
IB
case
is
of.
probably the place that would allow you to do that, where you can make inroads. If there's
Yeah. Or who, I'm at Advantage and Cunningham and IB. And so, and those risk guys change jobs too. It's kind of a bummer. You get rope from one guy
Real
and then
close to Joe, and then Joe's gone.
and then Joe's gone. But it's one of those things when risk calls and says you need to get smaller, you have to get smaller.
Yeah, we used to get
Yeah, definitely.
all the time.
Right. And remember that, and Spence can tell you this, and Charlie too, our job is to stay in the game. There are days where they give out $1,000 bills, so we want to be there. So and it's very difficult out here now. So just try and stay in the game during this tough part.
Yeah. I haven't made a trade in 4 days, 4 or 5 days, 4 or 5 days. Yeah. After the blow up last week, I said, you know what? That's it.
Sit this out.
That's it. I'm gonna wait for the next one.
Yeah.
That's pretty good discipline. Is that the longest you've ever gone?
No, probably not. No, definitely not. that was a backhanded compliment. Is what that was.
For a fucking degenerate, that's pretty good. So
Yeah, exactly.
And
Definitely not.
And then how are you doing emotionally with, after all that? Were you just like traumatized? Like, I'm sure everybody who's trading is dealing with some sort of trauma right now.
Last week was a historical week. I think it was, and that's kind of why I want to step off the pedal. If you're able to Mike Tyson the market, it's only a matter of time before you get Mike Tyson back. And so I'm looking to step out of the ring, reassess, and figure out where the edge is currently. Right. First off, premium is so high right now that if I come out here and buy these options, I'm just giving market makers money. So there's no real need for me to chase.
I mean, soft dollar sitting around could be, from a value perspective, could be deployed in your space.
Definitely.
Small, I think, right? Yeah.
Yeah, definitely. There's a lot of free yield. I think 5% right now you could get for yield on dollars probably.
I mean, Bitcoin came off that 25,003 low pretty hard and has been sitting. What it looks like it's the 29 level has been a floor since then. I mean, that's a solid bottom. If it holds 29, can it get going? I don't know, but it's certainly burning off the negative. It's burning off the negative momentum by going sideways here.
Yeah, exactly.
So
ranges are a little tight, premiums are a little high, and that just
right. I mean, that's normal given the trauma and the fear, right? I mean, that's just the after. That's what is it? The movie The Hangover. That's like after the party. And but it looks on this cap flow chart that I have, it looks like if it holds, above 29, it's pretty solid floor. Well, put it this way, you don't want them to go down here if you're a bull. You do not, right? You have a spike bottom that's holding.
Yep.
So if you have a spike bottom that holds, right, you never want a second chance in trading. So if it goes down, don't lean against that low. That's my 2 cents. Charlie, what's on the schedule? What's coming up, Charlie?
Shameless plug for Spence, his crypto course. Spence and Lucci created a crypto course. We're about to roll it out to the public. Master course students, new master course signups are going to get access to it. So if you just listen to Spence talk for an hour and you're like, this dude knows some shit, I would like to learn something from him and Lucci.
Spence, what are the prerequisites for the course? Coinbase account? Coinbase app?
Coinbase app. No, I'm not here to pitch you on selling or making money from your iPhone. That is not the game, right? Clearly not the game if I'm at the screens at a Saturday night. But yeah, Coinbase, we talk about exchanges in there. We talk about a lot of the stuff is actually decentralized markets. There's a lot of opportunity in decentralized markets right now because most people are afraid to go into them. So risk reward is there in terms of the alpha. But yeah, we go over kind of the basics on how to onboard and get you started. So, and I'm always accessible via Twitter, Twitter is probably the best one.
And how funded are the clearing firms that you're using to trade in these decentralized markets?
Yeah, that's the next step, right? So a lot of this stuff is over collateralized, and your liquidation is 20% or is 80 cents on the dollar, right? So they'll hit you out at a liquidation level of 80%. And then they'll take that 20% buffer, or it depends on the broker, but they'll take that 20% buffer and kind of hedge off their own risk and then put some in reserves.
You know, MF Global went bust and Refco went bust before that, and we got our money back. It took a year.
Yeah.
But are the financials of these clearing firms that work in these DeFi environments, are those financials public knowledge?
You can actually so in terms of financials, I don't know in particular, but you can look into their reserves, right? So they all have open source insurance funds. Like Binance, for instance, has their daily insurance fund that they're quoting, right?
Cool.
Now, granted, you have to trust them, but you can go into some of the blockchain and really start to do some digging. A lot of people in the space right now, it's a collaborative effort, right? So if you come in and you're like, yeah, DYDX is insolvent. People are going to be there. They're going to be working on it. They're going to look, and there's access to information if you need it for sure. So,
yeah, thanks for coming on this. It's been a kind of a dark week for all of us.
yeah.
And
hey, man, we're getting better prices. This is good. This is good.
Right, death and rebirth is a common theme.
Definitely. Yeah, I'm excited. Better prices are good.
Yeah, good luck with the class. I'm sure, and people, I'm sure it's cheaper to pay for the class than to pay learning to trade.
Definitely.
Yeah.
God, what were we down 4% today? So I hope everyone survived that today, kind of out of the blue.
Yeah. I feel like it was a quiet 4 or 5%. It didn't seem like there was a quiet, like normally they'd be screaming and yelling and we're down 5%, and just slowly bled off there.
I mean, that's the Fed's job, right? Is to make sure that the volatility doesn't get, if you have huge margin, which you do now, right? In the system, right? If what would cause a collateral chain shortening would be vol exploding.
Yeah, definitely.
Because they can keep margins where they are if they manage the decline.
Yep.
So people who are looking at that non-confirmation in the VIX are missing the fact that the Fed is leaning on the VIX, managing the down move so that they can reduce margin in the system without blowing out the collateral chain in margin calls.
All right, Chris, question. What do you think blows up? Or do you think something doesn't blow up?
I mean, stocks got pasted today. That was a good blow up. I got so angry at the fraud involved with them front running the Chinese thing. I wrote my friend at the CFTC and told him this whole thing was a joke, but everybody knew. And then because of that, there was no real bid. Little did I know it would be the next day. I mean, Paul last week said that real estate's done. It's look at where mortgage rates are. Look at the fact that stocks are cratering. Layoffs are going to come.
Yeah. That feels pretty real to me.
Right. I see plenty of charts where they're overbuilding housing relative to millennial population growth.
But it's not going to blow up like it used to, right? That there's not leverage at the level there was in the CDOs and all those kind of things.
I don't think it's going to be subprime, but there's a lot of markets that still haven't even cooled off from the insanity of what it was. And it's just like, you can't sustain itself with mortgage rates like this, Chris. Everything that you just named, like it's just the math.
Right. Wage growth can't support, right? It's just what will blow up. I don't think they can. Spencer, I've been a bear for a long time. I don't think anything can blow up because it's the Fed will do everything it can to prevent what it can from blowing up because it's cheaper to keep it up here than to bail it out. That being said, I mean, what's expensive? Nothing's super expensive except housing. You know, if in other words, everything's oversold here.
Right.
Or as Steve Hammer says, overextended to the downside. So if you're looking for something to blow up, that means it's going to crash from here because,
right,
we know crashes occur from oversold. So Art Cash in these like 90 would always say betting on a crash is a bad bet because it doesn't happen that often.
right.
And also the Elliott wave guys, which I'm not a follower, but they had a really interesting point. They said when prior moves have been vertical, the next ensuing move in the same direction will be complex. So every move we've had, March 2020, you know, the 08 debacle, the 2000 top, 87 top, are all straight line drops, right? And now we're having a complex, you know, back and forth, right? Like what you say, it was a mellow 5%.
Listen, 5% of my market is mellow.
It's mellow,
That's
right?
another day.
Right, it's a mellow. It's like, honey, I'm gonna go for a walk. And anyway, so given that's an interesting thought, right? Given that all of our prior moves have been blow ups, like you say, and vertical, maybe the moves that we're going to see now, whether it's in housing or layoffs, or in case of crypto, in the case of stocks, you know, or the dollar even, may be complex, where we'll be backing, upping and downing, where the traders get paid, and we have to be quick if we're long and patient if we're short. And what have we learned? We've learned that bear market rallies are quick and fast and big.
Yeah, they are.
And they die a glorious death. Yeah, everybody go to Spencer's class. It's got to be good. It's got to be freaking good. And I guess we all should become literate in that, right? They speak another language. For those of us who don't speak that language, and Charlie and I are not geniuses, it's probably very wise to be able to speak that language in the future. So Spencer, thanks for teaching it in the future.
No problem.
Charlie?
Awesome. Appreciate it, Spence. It's great.
Yeah, man. Thanks, man.
Very helpful.
No problem. Thanks for having me.
Yeah, you happy, healthy, everything okay in that department? No injuries?
Yeah, no, I'm good.
All right.
It's summertime. It's always summertime in Puerto Rico, but it's about to be summertime in the States. You know, I think I'm optimistic. So even though there's bloodbaths everywhere, I think it's a good time.
You know,
It's a good time for everything.
You learn to trade. It's a skill they can't take away from you.
This is true. Yeah, to me, as long as the game stays alive.
Right. We are like the plumbers. There's always going to be a need for water, and there's, you know, the world is going to free markets, and so might as well. It's, as I keep telling Charlie, we got to teach more people just to survive.
Yeah.
Right. Spence, have a good afternoon.
You guys as well.
Thanks, guys.
Thanks, Ben. Bye.